And that means we are live here with our halftime report, Tackle Trading's daily show where we get together, talk markets, break down the news, and have some fun while we're doing it. We've got Noah, we've got Cody, and we've got myself, Tim, here. Noah, how are you doing today, my friend?
I am fantastic. Thrilled to be here.
You know, the market's doing fantastic as well. In fact, a lot of news out of the weekend. They were going to pull some bill out of the Hong Kong legislature about the extradition, which I guess started all the protests months ago. Market liked it. The Asian markets rallied. The European markets rallied. Now the U.S. markets are following through. But for a technician, Noah, we're just back at resistance. Give me a full breakdown on the S&P, if you will.
Well, that is exactly what we've done. The market came down a little bit. I think it was, watching. Everybody was watching with bated breath yesterday as it flirted with that 2,900 level, hanging around those moving averages. I have got a 9 and a 20 period moving averages, both really popular moving averages, and it held the line. So I think that encouraged the bulls even before some of the news came out. And I noticed the market was kind of holding that ground, post market last night as the futures were trading overnight. But then as the news hit, boom, you got a nice little rise right back into resistance. And we've been here before. We've tested this resistance zone 1, 2, 3, 4, 5, good 5, 6 times. You got a 50 period moving average over the top of that, which again is a big price level for folks. And again, we're just hanging out around, call it that 29.45 ballpark. And, I'm very tentative about this little bullish activity in the market until we clear that resistance zone. But it is a good sign. The higher low is a good sign. And you're seeing a little bit more green candles, in this last run than you saw, persistence of green candles than we saw in the previous 2 runs. And it's also lasted a little bit longer in time. We're an extra day or so into this run than we were the previous 2. Mm-hmm. So that gives it a little bit of an ascending type triangle look. And again, if we see a close above 29.50, I think it'll be easy for the market to come back up and retest those old highs at 3,000.
Mm-hmm. Bring up FXI for a minute, if you will, and let's talk a little bit about that Hong Kong news. Now, I'm not an expert in politics in Asia between Hong Kong and China. I do know that bill that they had introduced sparked all these protests for months and months and months, which has been on the front headlines of almost every news outlet for quite some time. When they withdrew that here today, Noah, it popped it back up. But this rally on the news, it's not exactly a good technical rally. We're coming into old support. We're coming into some falling moving averages. You're still in a downtrend on the weekly. Is this just a news pop? Can it become something more?
Well, it is a news pop, and I believe that the protesters still have 4 more demands to be met. Mm-hmm. That extradition bill was one of the big ones they wanted gone. And, that's obviously the news. You got some good energy into it, but I don't know that, that solves all the problems. With the overhead support resistance there, I personally would like to see it get back up above that 50 and maybe put in a higher low to really, show us a sign of reversal. Because otherwise, I still think we're in that lower low, lower high, lower low context. And that old support resistance zone, for all we know, it holds and the gap fills. So, but definitely interesting. And I think that's a good thing. I think they're moving in the right direction with that news. Mm-hmm. And it's on typical volume thus far. Most of the movement occurred overnight, and so we don't get to see that volume, really tracked that well. So you get the gap on that, but interesting move, and it'll be interesting to see which way if it closes higher or if it ends up filling that gap.
Technical programming note here, Cody, real quick. My YouTube stream is just spinning and not loading the video. That might just be on my side. Let me know one way or the other. I do see chat coming in. If you're out there and you can see our show, I usually open that up just so I can watch the chat.
I see chat coming in just fine, and it is live on YouTube on my end. No problem here.
Say la vie, then I'm good to go. Don't really care. As long as our audience can watch the show, I'm happy for that. FXI obviously coming back into a falling downtrend on the weekly as well, that old support. There's a lot of mixed technicals in there. I'm concerned about a market that bounces on news that doesn't have really a fundamental follow through on it, but the market is rallying here today. I'm still neutral across the S&P and most of the other indexes. Let's break them all down one at a time, and let's actually go on to the Dow, the NASDAQ, and the Russell, Noah, and see if there's any subtle differences in between them. I've felt for a while now the S&P, the Dow, and the NASDAQ all kind of feel very similar. Give me a breakdown on them one at a time.
They are definitely similar. I think that the one thing I notice about the Dow is that it looks like that low came in a slightly bit higher, and it's a little closer to breaking its resistance zone. It's got that one shadow on the wick where it popped up and hit that 50-period moving average, which was a false breakout before. So, but that cleared out some of the overhead, supply, and I think it's right there. It's resistance. It's closer to the breakout than the S&P. And again, with just 30 stocks, it's probably easier for it to lead the market than trying to drag all 500 stocks along with the S&P 500. But otherwise, they look very, very similar, very, very, much the same resistance zone we need to see break.
Yeah. And by the way, I just stepped out because I'm so OCD, Cody. I had to have my wife check and see if the video was loading for her as well. I trust you. I believe you. And obviously,
well, actually, looking at some of the students, looks like the computers are having issues. Looks like some of our students on their phones aren't having issues. Some computers are doing fine. I don't think it's on our end. I think this might be a YouTube thing.
Could be a YouTube issue. If we are having that, obviously try to reset it, try to log in from a different browser. I'm not sure. I'm having that issue on Chrome here myself. So we'll keep breaking down the markets one at a time. We're not in charge of YouTube. I do know that Google recently came out. Bring up Google's chart here, Noah. There were like 13 or 14 states that are getting ready through their attorney general's office to actually file an antitrust suit against Google. Noah, is that news to you, something or nothing? I mean, we've seen this before. The stock actually gapped down on this news a couple of times this year. It's battled all the way back, but it's not good news for the company.
No, from a chart perspective, it's pretty neutral. No major response to the news. How do we get our legislator to sign up for this class action lawsuit? Just curious. Mm-hmm. That sounds like that's definitely going to be interesting. I think you're going to see more of that with some of these major tech players.
I think it was a slap on the wrist, and Google doesn't even care. They're like, sorry.
You're probably right. You're probably right about that.
I'll pay my $170 million and then just keep on doing what I'm doing because that's not a big enough fine for them to even care. They made $35 billion last quarter or something like that. It's like, and you're going to charge them a fraction of that. No, they're not going to curb their ways until you've given them some serious fines on breaking the rules, especially if they repeat. Like, let's say they give them this fine and they do it again. Like I tweeted out this morning, 10x that and hit them with the $1.7 billion fine. They'll start looking.
And my wife did confirm the online on the computer is not working on video, but the iPad is as well. That's what our audience is saying as well. I think we've got that kind of figured out in some way. We don't know why it's not streaming online, but if you are watching this on a computer and you can hear me, go to your mobile device and check us out on your iPhone or an iPad or something like that. Should be able to work. I'm with you, Cody. I mean, they do have to go after them. These big tech firms, by the way, I mean, this is like breaking up the oil firms 100 years ago, Noah. In the grand scheme of capitalism in America, there will be a time where they start breaking these companies apart. Whether you like it or not, whether I like it or not, I'm a capitalist. I don't like it. I don't want to see, Google antitrust suits. Now, I do think they need to be held to a standard. We can't let them just dominate everything and then push everybody out of the way. And we have to have regulation. But I have no problem with the size of the companies. It might just be the scope of what they can do is what the attorney general's offices in those states are going after. I read through some of the briefs, Cody. Is that kind of the issue here? Is that they can control so much of the data and the information and the databases?
So the one I was looking at was they have been collecting information just like they always do. They just pick away information, and they weren't even realizing that what they were doing is collecting information on what children were watching for millions and millions of viewers. And of course, with children, there has to be parental consent, and they weren't doing that. They didn't even bother to care, check, or anything, but they did know it was children, even though they're like, oh, well, we didn't know. Yes, but you're logging it away as this is what kids are going to want to watch. So you did know. And that's kind of why they got hit with that, because obviously you can't just track information on children without some sort of parental consent beforehand. Mm-hmm. So now what they say they're going to do is they took the $170 million fine and they said, okay, what we're going to do is any kid's video period, whether it's under a parent's account, whatever, they're all going to be tracked as if a child is watching at all times, which to me just makes sense.
Yeah.
So Ed DeCasso just chimed in. He's watching it on Chrome. I switched over to Chrome browser, and my video is streaming just fine now. So
mine's not streaming on Chrome, so it could be, who knows? Who knows? C'est la vie. I'm not going to worry about it. We're going to keep recording, keep pushing it out there. If you have to catch the recording later, I'm sure the video will process and render and get out there. And it does seem like some people are getting it to work and some people are still getting the circle of death like Bob LeBlanc talks about. That's true, Bob. It is that circle of death. You're just watching it spin and you're like, when is this thing going to happen? I get it. So c'est la vie. It's kind of like theta trading, Noah. Sometimes you got to just make it simple, stay bored. Now, Google, we'll come back to stocks as we go. Give me the Russell 2000, if you will. 1450, I'm concerned about. If we break below 1450, I'm personally going to hedge my systems. And I know that there could be some debate about where that hedge needs to happen. Where do you guys support on the Russell here, Noah?
1450, 1440 at the lowest point. And I think the sooner you hedge, the better, the more effective it is.
Yep.
So I think that's a very clear line in the sand. I might have put mine at 1440 to clear that low, but it depends on what the delta is and which legs you have sold on those options. The Russell, has been pretty solid for those iron condors as of late. Gave us some minor scares, but it stayed range bound. And again, it's not as strong as the other indices as far as showing signs of breakout. It looks to me like a little bit more like a sign of breakdown.
Well, and it's an important point to make. When you think about the last year in iron condors, a year ago in September, we were heading right into the worst 3 or 4 month stretch for that system over a 5 or 8 year period, and where the market just completely crashed and then completely V-shaped rallied and took it out a couple of different months. I think in the October contract, you could have been wiped out, maybe even December or January, depends on how you managed it. But it all comes back to position sizing. When you're trading probability systems, Noah, where you know that you're going to be right 90% of the time, 95% of the time, based on the delta, based on the market performance, based on back testing, you don't know when that 5% is going to be, right?
Right.
Which is why, and it could happen 2 times in a row. I mean, you can have that one, it's like a roulette wheel. You got that one green square, right? It can come up green 2 times in a row, even though that's only a 1 in 37 shot. So I love what you just said right there. Hedge early if you know how to hedge. My preferred hedge on a vertical credit spread deep out of the money at low delta is to turn it into a ratio spread. You are the king of adjustments. This is something that when I think of adjusting option spreads, you're the top guy I usually think about. What's your preferred way to hedge a vertical credit spread deep out of the money?
A ratio is probably one of the most effective. You can do that, accomplish that a couple different ways. You can add more legs on, or you can break part of the legs. Debit spreads, I think, are a really good way to offset some of the downside risk. That means you buy, in this case, if it broke down, for example, you'd buy some puts and you'd sell some out of the money and you try to hedge the delta. If you have futures, and depending on the position size, futures may or may not be applicable to you, also depending on account size. I like to hedge the RUT index with the Russell futures. Mm-hmm. So that's an effective way to hedge. And again, that only really makes sense if you're trading 10 contracts or more and you have the account size. New mini contracts are kind of an exciting way to approach the hedge on that as well, because you have nice liquidity. Individual options themselves, the thing I always worry about with individual options on the index are the spreads. Like, what are the size of the bid-ask spreads? And if you wait too long to hedge, you usually end up paying a premium for if the volatility spikes. Mm-hmm. So you have to watch out for that. And if the volatility has already spiked, I usually go to the debit spread route, because then that kind of comes out in the wash. But you have several choices and options when it comes to hedging. I think the key is just having a game plan in place ahead of time. Yep. So that you're not like a deer in the headlights frozen when it breaks support. You need to have your alert set up or your trigger set up. And I usually, it depends on if, and I think your first line of defense, like you mentioned earlier, Tim, is position size. Our running joke in the lounge this morning was I was taking confessions, trading confessions.
I love it.
That's good.
Forgive me, Father, for I have over position size yet again. So, yes. And I cannot absolve you of that sin. So you're on your own, suckers.
Forgive me before I went to trade management, before I checked the news, before I did market analysis. Forgive me because I didn't journal my trade. I mean, there's a million of them. I love that. That actually, that would.
I've been thinking about actually making that a running bit. Dress up a little bit like Father Guido Sarducci or something like that. Meal Saturday Night Live did.
All right, Noah, it's going to become a segment now. It is going to become a segment. Noah, you have to dress up.
Trading confessional. We'll do this.
What's your trading confession out there, halftime crew? What's one thing that you actually did make a mistake on? You knew that you were breaking the rule and you did it anyway. We can all learn from it. Let's have some fun with it. No doubt about it. Let's break down the commodities markets one at a time. Crude oil, gold, natural gas as well. Want to talk silver again here today. Metals are screaming bullish. Oil, in my opinion, is still neutral. Give me a read on oil first.
Yeah, oil is a really important thing to watch right now. I think it's a good sign of how the market's feeling about all this talk about recession or not. I think a breakout above 57.50, 57 ballpark would be a strong sign that we're seeing consumption up, the volume or the supply down. And if you see the oil breakout, expect the energy stocks to rally. If oil comes back down towards $50 a barrel, on the other hand, that's a stronger sign of recession. Again, fears of oversupply, not enough consumption. And then your energy stocks will continue to struggle. So that energy sector has been beaten down, but if you see a reversal or breakout, and again, optimism on economic output, you'll see consumption stay high. Mm-hmm. So it's at a critical point right there with the 200 period moving average, the 50 period moving average. And again, trading up on typical volume early in the session. So breakout above, call it 57 would be and a close above that would be a clear sign for the bulls.
Mm-hmm. The weekly inventories number, I think, is coming out tomorrow, I believe, Cody. They always push that back a day when you have a national holiday like Labor Day.
Yeah, they do.
Yep. So that actually did not happen here on a Wednesday. So we didn't get inventories numbers. That's not why it's running. Obviously, just on hope that global demand is going to be strong. Whenever you get the Asian markets popping here, that's going to be an oil pop as well, because it trades so much based on international expectations. I think what you said is correct there, Noah. Hitting resistance, got some momentum changes in here a little bit as well. Before we go on to metals, give me natural gas, if you will. And I've been watching this chart like crazy the last couple of weeks because I'm starting to get much, much more interested. Now, I still have not pulled the trigger, but you have a trend line violation, you have a pivot violation, you have a little tiny resistance breakout that happened about a week and a half ago. You've got all these moving averages rolling now up. You've got new resistance up here about that 2.5 mark, Noah, which is going to be very clear. Give me a full breakdown on this chart, if you will, because I'm starting to get interested again, and I'm not there yet in terms of trading.
Well, it just made me think about the old green light system. You remember way back in the day, when you first learned how to trade, you learned to buy the red light, green light, the MACD crossing up, the stochastics crossing up, the moving averages. This is a green light buy signal. Mm-hmm. If we were to go add on a MACD indicator here, and you look at that, you'll have your oscillator divergence and more than likely a cross above zero, which you do. Sure enough, there it is right there. So you got the 2-line cross above zero, coupled, then I've got an RSI on the chart, which is similar enough to the stochastic. It's already giving you divergence and it's already running up and showing signs of strength. And then crossing above those moving averages. So my question, Tim, is what you waiting for if you're still sitting on the sidelines? Well, extra confirmation?
The weekly chart's still ugly, and I'm worried about seasonal factors as well.
Yes, no, I agree with that. And that's reasonable because you do have a really strong overhead support resistance line right there at 250. And you're just seeing that's the sign of reversal on the daily time frame. Seasonally,
I was about to say, what about seasonality?
I do expect natural gas to run up as weather gets colder, but here we are in September and it's starting to move in the right direction. The other thing I noticed down here, Tim, is the volume spiked up a little bit.
Oh yeah, volume's been picking up as well, for sure.
So those are all strong signs. I think a good way to start out would be, maybe selling naked puts or credit spreads. Yeah. I wouldn't be super directional on it at this point in time, but I would definitely be confident selling, out of the money $2, puts or put spreads below support with low delta.
Characteristics of a reversal are definitely there. Give me UNG, if you will, because I was thinking about naked put on UNG. Bull put on natural gas futures could work as well. I'm not there yet. Still kind of gun shy on that one from watching what happened last fall. There's no doubt about it. But a naked put down underneath support, if I'm looking at the option chain on UNG, you could do the October. There's no money at 17. You'd have to come up to that 18 pivot point. You pick up 20 cents on a 45-day naked put option, which is within the time rules for theta decay. It's about a 9% ROI. Well, actually almost a little bit more than 11% ROI. So there's some money there. Just you're overstretched. It comes down to whether or not you're willing to boomerang that trade, take delivery, turn it into a cash flow vehicle. You know, there's a lot here. I'm not there yet, but UNG, I mean,
I agree with what you say about being overstretched when you look at it here from like a technical perspective, just the back-to-back runs, like the size of those runs, you know, you are swing range up. So you might want to wait for the pullback. And if you get a pullback and a buy signal to rising, 9-period moving average, that might build your confidence and get you a little extra premium out of the option, maybe give you a lower strike price too.
Yeah, I love cash flow. In fact, in the chat here, guys, if you do get video on YouTube and you're here with us, welcome. It's always good to have you. If you're new to our show, subscribe, give us a thumbs up. Always get the word out. We do appreciate that. Our loyal members out there, we know who you are and we do appreciate you. And we welcome new people all the time. Put in the words cash flow in the chat. Because what we're really talking about here with natural gas are cash flow strategies, naked puts that you'll end up taking on delivery, maybe turning into covered calls. UNG is a good one for a retirement type account, very conservative ETF. When it gets neutral, it's just been in a downtrend for a while. Break down the metals markets, if you will here. Gold looking like a high base, needs to break out. Silver is just continuing to run. Platinum is going crazy. And copper, which obviously whenever you have news out of China, copper is going to come to the forefront of my mind because China is the #1 user of copper in the world with all the industrial production and home building and all that kind of stuff, manufacturing. Copper's up big, 2.5%. Break down all the metals markets, if you will, quick, Noah.
Yeah, you bet. That is a very strong sign on gold, starting out with gold, and you got a high base, just like you mentioned, knocking on that resistance zone. Looking at gold from the weekly perspective, you're coming into some overhead support resistance, historically speaking. But I think we're seeing a little bit of a gold rush here as, again, fear of recession and fear of economic slowdown has had the gold bugs out there buying. I just have been reading Aftermath for our book club, Tim, and that's got me in on this gold bug rush. You got a nice, a lot of momentum on there, but it is a little overextended on the short-term time frame. Any dip off of this, I think, is a buy signal scenario here. And there's plenty of talk of gold, reaching new highs and lots of talk about, gold pegged currencies to the SDR and things of that nature. And again, lots of consumption going on. So ride that trend while you can. Silver has been a little mind boggling when you compare it to gold. Pretty parabolic. And look at that move. I mean, just, how often do you see trends run with that kind of parabolic curve?
Yeah.
So definitely stretched up, back it out to the weekly time frame, and big support resistance zone here at 20. So look for some profit taking. I think, again, you could also look for any dip or pullback or consolidation as a setup to buy.
Currency markets, the dollar's down here today. The pound is up, actually, on the news that Boris is going to be getting a little bit of pushback from the Labor Party there, Cody. Cody, I know that you've been trading a lot of Forex lately. Obviously, you're a Forex guy. What's your read on the dollar, the cross pairs, the whole Forex market?
Overall in the market, I'm waiting for the pullback that we're having and currently getting. So yesterday I said Forex traders look for the euro dollar cross pair to reload. Know if you could pull up that chart for me.
Which chart do you want to see again?
Euro dollar cross pair.
EUR/USD.
So what you can see is we had that breakdown last week and we're starting to get that retracement. So guys, keep an eye on this one. Look for it to pull right back into that $10.06 level. Possibly get a doji down from there. Now, when it comes to the Brexit news, yes, Boris is getting a little bit of pushback. So he was saying October 30th, deal or no deal, we're out. And they're now pushing for an extension all the way out till January. And this, of course, just sounds more like what we've heard. It's kicking the can down the road. And what it is you have the two different parties, one fighting to stay more of a globalist type nature. I'm not going to get too much into politics, but more of the, hey, we need to stay in the EU so that what we're doing is what everyone wants to do. Whereas the other side is saying, we need to separate because we're a sovereign nation. We should be able to make trade deals with whoever we want because, well, we're our own people. And the people within Britain say, people who we didn't elect are telling us what to do. That's funny.
This is the best GIF on the Brexit I've ever seen.
Actually, that's really good.
And that is exactly how my dogs are. So yes,
that's really what it is. That the people of Britain voted to exit, but as soon as that's happening, the policymakers aren't making it happen. So that's really where it comes down. You have the two parties within Britain. One saying the people voted for this. This is what we're trying to do. The other one's saying, yeah, but the people don't really know what they want. So let's not do that.
But the people are fickle. We, the elite, know what's best.
Well, it's not just that. I mean, when you are a representative government, even parliamentary, even if there was a national vote, but your local people voted for you to represent them, there's some debate there politically. Which
there is, and that's a republic democracy type representative democracy. So we can get all that. But basically, the reason what the pushback is that one party wants to not leave, and the other one does. So what they're trying to do is a soft Brexit, which basically would just be a sticker stamped, hey, you exited, but you really didn't. Whereas the hard Brexit is, hey, take all your rules and go somewhere. We're going to do our own thing over here. So they were originally trying, that's what Theresa May was trying to do for the longest time, is get a middle ground between those two. But Boris Johnson said, you know what, if y'all aren't going to make a deal that's at least leaning towards Britain being sovereign, then we're just going to leave. Yeah. And now he's getting pushback from the Labour Party about that. So the British pound is taking it a little against him, but I haven't touched the pound since the Canadian pound crossbear, just because of this. It's too much news driven craziness. It looks like it found that bottom. It did break below that $1.20 yesterday and then immediately rallied back into it. The pound is a no touch for me right now.
Mm-hmm. You know, what might be the best play in the entire Forex market is the dollar yen carry trade, because it's just neutral right now and it still has safe haven status. There's so many ways to trade it: short-term, long-term, intermediate. Cody, I know that we're in development of a Forex course that we're going to be releasing probably within the next couple of months, and very excited about that. Yeah, Forex 101. If you're out there and you're interested in the Forex markets, stay tuned. We're going to keep working on it. Cryptocurrency, Bitcoin is flat at 10,500. I was concerned about the chart a couple of days ago, Noah, even when we were talking on the podcast on Monday with Matt and Mark. You know, I'm like, well, you know, it's underneath the moving averages and it's still right at that 200, or is that the 50 you've got in green? Do you not
50 in green? I like to keep my colors confusing for the regular people. So
that's right. Yeah. I'm neutral in the short and intermediate term. I'm still bullish over the long haul. I still believe in crypto. What's your read here, Noah?
Well, again, I'm neutral too. You're hovering around your 20 and your 50, and you're chopping sideways in between pretty well-defined support at 9,500 and really well-established resistance out at 1,200 or 12,000, excuse me. So you've got a pretty solid, resistance neighborhood in here. You can see it's tested off that 10,908, 9,890 ballpark. One time it's been a support zone in the past. Two times there's a gap around that zone. So it is a significant price level. And I think if you do see a breakout above that shows some sign of strength. But again, you have some overhead resistance. So I would say for short-term speculators, short-term breakout would give you some bullish signal. Mm-hmm. Otherwise, where it's at right now, you have a small sell signal at a resistance zone. So you might see it dropping back down and testing support. This is one where I would break it intraday and look for the confirmation on a smaller time frame.
Very good. And what I want to talk about here for a couple minutes, then we're going to do rapid fire, is Tackle 25 update. Noah, tonight you're going to be doing a mastermind group. I'm a huge believer in the covered call strategy in many, many different forms, many different fashions. I love it in retirement accounts. I think it's one of the best ways to approach a more conservative account. When you've got capital, you've got a long-term mindset, you've got a proper investing mindset, it allows you to just create theta and cash flow and whatnot, which is why we created the Tackle 25 system. Now, if you're out there and you're watching right now, just type in Tackle 25 in the chat. And I want to highlight a couple of stocks that are grabbing my eye, Noah. Let's start with Activision, ATVI. And you're going to be teaching tonight. What time is that mastermind group, by the way?
Oh, we typically run at 8:30 Eastern, 6:30 Mountain, right?
8:30, 8:30. Yep. And now just going to kind of review the list and talk about cover call.
When I talk Tackle 25, it's always about the management of the trade, how to roll those calls, what to do if the stock runs up, what to do if the stock runs down, and to apply your core rules. So we always start out applying the core rules, and then we talk about the what if scenarios, how to really manage those trades. And I think that's a great benefit to you. If you're learning covered calls, you're learning the boomerang trade, learning how to manage those, and again, how to maximize your gains, mitigate your risk, and really focus on that cash flow generation. It's going to be a good time. Plus, we always work in a few good dad jokes here and there to make it entertaining. So, You don't want to miss out on that one.
Of course. Activision here, they
No, I feel like there's a joke in there between dad jokes and like Father Noah from like the confessional. Like
you could probably do this. Like, who is your father? I am your father. I don't know.
Now we're just bringing worlds in. I mean, worlds are colliding. I don't like it. I like George Costanza. We've got Star Wars. We've got the church. We've got all kinds of stuff going on here. Activision broke out. Noah, that's a beautiful chart.
That really is. We were talking about this morning in the lounge, and then you and I, we were talking about it with the return of World of Warcraft. You're seeing subscription rates rise. That's solid. That's crossing up above all those moving averages. It's got all those same kind of green-like qualities we like to see in a reversal.
Mm-hmm.
They drag that chart back up so we can see it. It's stayed consolidated and range bound for such a long time. Great covered call candidate. A breakout like that, if you're doing the covered calls, you might be wanting to roll those up, take advantage of the capital gain. Nice little rise there. Good momentum and building volume is the other thing I noticed on this. You had some volume building up prior to the breakout and a big spike on the breakout.
Mm-hmm. So, bring up Apple Computer. Apple Computer is a Tackle 25 stock, one that we featured on our list, which, by the way, they're optimized for covered calls. They're good fundamental companies that have good options, that have enough return, but not too much return to kind of find that Goldilocks sweet spot of how to trade a conservative cover call. Apple's neutral, which is actually not a bad thing for covering. When you own equity, if you owned 100 shares of stock on Apple, capping it up at 210, 220, whatever it might be, choose your delta based on your system would make sense to me. It's also our stock of the week. Give me a quick read on Apple, if you will.
Well, that is a pretty good looking consolidation pattern. It's a pennant type, pattern where you have higher lows and lower highs at the same time. This type of consolidation and neutrality, I always think tends to lead to a breakout, either up to the upside or down to the downside. It'll probably run whichever way the market moves, but that kind of consolidation, a little quiet time, and you got earnings coming out here in early part of late October, early November, right there. It looks like the 31st, Halloween. Mm-hmm. This could be a volatility play, Tim. This could be the type of strategy for either a straddle. While you have lower implied volatility, if we look at that right now, IV is kind of mid-range, and I'd expect implied volatility to rise before earnings, and direction at this point in time, it could be bi-directional, and neutrality, which could break to a direction. So good candidate, I think, for volatility type strategy.
One last one off our Tackle 25. And if you've not gone through the course, guys, go through the course. We put it out there earlier in the year. It's a 2019 edition of what our Tackle 25 course is, with new videos and new instruction, all that kind of stuff. Applied Materials, AMAT. You got to look at this pullback breakout here today, Noah. I mean, what a beauty.
Well, that's a solid move up. And again, I would, want to check the semiconductor index on that just to see how the rest of those are looking. But off of the, big moving averages, break above resistance, closes above resistance, little increase in volume. It's a beautiful chart.
Yeah.
You gotta like it.
I agree. So check out that mastermind group tonight. If you're a pro member of Tackle Trading, make sure that you're engaging and getting in there and asking questions and all that kind of stuff. It is now time for Rapid Fire, where we look at the companies that you guys want us to look at and give you a quick read, quick breakdown. We're going to be doing Rapid Fire. We've got Cody, Noah, and myself, and we'll rotate in that order. And guys, pop in your symbols as we go. Now, I enjoy Rapid Fire. And originally started out just on the coaches show, but it's always been one of our most popular segments. Why do you think people like it so much?
Well, I would always like to get a little extra set of eyeballs on the charts I'm looking at, because sometimes you get so dialed into your own directional bias on charts and your own, what your trade bias is. It's always good to get a fresh pair of eyeballs on that, especially when you get a solid technical read from somebody with a lot of experience.
Yep.
So,
all right. Very, very good. To start with Abercrombie and Fitch, ANF. I'm going to give you the first one here.
ANF, retail sector weakness, down on earnings, pay their dividend, below support. I don't see a lot of signs of strength here. I would definitely lean bearish on that.
Yeah. General Electric, GE. I've got to take this one. It's a bullish, rally here in the very, very short term. It's got that gap point right here where we're at right now. Old support, new resistance, falling moving averages, terrible fundamentals. It's a garbage company that probably is going to be a $5 stock at some point, but that's my opinion. Other people like the dividend. They like the neutrality and they see potential. It's an industrial play and an international play. When the markets have good news like this, a company like GE is going to pop. No question about it, up 5% here today. Very, very debated, Noah. Where do you fall on the GE debate?
Well, a penny dividend, meh. I think the fundamentals are weak. And again, the whistleblower news, there's probably some questions about their accounting practices.
Yeah.
How serious those are, I don't know. You got to rally on weaker volume. Compare the selling volume to the rally volume. And I think that gives you an indication of the strength of the rally.
Yeah.
Yep. So I don't trust the rally, but again, it's not one I would personally hold.
Newsbound, there's no doubt about it. I mean, you could easily have news and see the stock pop up or down 10% on any given day. So trade accordingly, guys. Use the right strategy, right position sizing. AIG next. By the way, on GE, I'm still bearish. Just make sure I'm clear.
Yeah.
Does everybody know that?
In full disclosure, I do have long puts on GE, long-term long puts that I'm holding on to.
That's right.
Man, y'all are a little bit more conservative shorts for GE. I'm being a little risky there. I got some butterflies on it.
Oh, do you?
Oh, yeah. All right.
Yeah, so I'm pretty aggressively bearish on GE right now.
Yeah, I'm still bearish. I mean, you're up 5%. You can't, argue with that price action. There's no doubt about it, but I still see that old support as very good resistance. Shopify, Cody, you're back just in time. We'll give you, AIG. We'll give this one to Cody.
Cody, go.
AIG, taking a look at it. Not really much to see here. It had that double top around 57.60 or so, coming down, broke below the 200, popping back up to it. If anything, I'm seeing this more as a reversal than anything. I'm just not going to touch it.
Yeah, reversal characteristics are moving it into neutral for me, or even a breakdown potentially. Shopify for you, Noah.
Woo! That was my Pavlovian response. Just
Purdy
pullback into a rising 20 and an old support resistance zone with shrinking candlesticks and diminishing volume. I just need some confirmation. A big player like this, you got to be, selective about the option strategies you choose. But that's a pretty good looking picture of a pullback. That's kind of a textbook example of what you see in a pullback.
Yeah, I do like that chart.
That is beautiful.
Needs confirmation. Beyond Meat, EMA out there, BYND, and I'll take this one. Man, the chart doesn't look good. I mean, it was so bullish there for several months. Be very, very cautious with this chart on any breakdown from here. Clear support that we put in there in the middle of August. Noah, if that did not hold for whatever reason with the PE ratio and the hype, I think you've got some potential downside. At this point, I'd be very neutral and very bi-directional. I'd be waiting for some kind of K-trade setup. If it breaks to the upside, you could play it up. If it breaks down, you can play it down. Let the price action dictate this one here, guys. No doubt about it. Big next one here, Noah. You get this one. BIG.
Big showed a little rally, bounced down off the falling 50. It's still above its 20 and its 9, but to me, it's got a lot more bearish look to it. They do have a dividend coming out, which will typically make the price of the stock drop with the dividend payout. Yeah, definitely looks more bearish on that.
That's an earnings beat that people took the opportunity to short, is what that is.
They gapped up and they shorted into it, and then if it breaks back down below that 20 period moving average, you probably have a bearish signal below 20.
Mm-hmm. Yeah, I would agree with that. Amgen, Cody, AMGN.
AMGN. Looking at over here on Noah's chart, I want to break up 210, probably actually that high, but depends on whether you look at the wick or not. I have to go intraday to see. But a break and a close above 210, I like the high base.
Yeah, I agree. Triggering there would be interesting. Yeah, I think you do have to break that down multiple time frames to try to figure out exactly where that trigger is. Checkpoint CHKP here, and Noah, you take this one.
That's dropping, slowing momentum. You're going to see oscillator divergence on this one because it ran down pretty hard, and then it's slowing down as it drops. So what you'll see is like a MACD starting to shift back from negative to positive. You'll see oscillators like RSIs and stochastics putting in higher lows on the indicator. A lot of times you'll see that where the stock's making new lows, but the indicator's rising. So you got slowing momentum into a support zone. It's still below all the moving averages. and it can break lower. If it breaks, you got a target of about 100. If it finds support and rallies, you're probably only getting back up towards the 112 zone.
Twitter, I'll take this one here, Jimbo. Love Twitter from a company perspective. Breakout would be definitely tradable. I don't know if it's a great swing trade. In fact, my personal opinion is it's not. I know that other traders would trade it. I think it's a better position trade, personally, Noah. The choppiness for me. You know?
When I notice on this one, when it breaks out in the past, it tends to give up the gains quickly. And so it's got a pretty pattern. And I've got a stock position. We messed around with an options trade on it this morning in the lounge. But I expect if it does break out, a very small pop and then sideways consolidation like its pattern, like it has behaved in the past.
Yep. U.S. Steel. Cody, you get this one?
All right. U.S. Steel, a very popular Tech 25 stock. So, or is it Dirty Sexy Money? One of those two. So it's been in a downtrend for quite a while now. Obviously, if you already own it, you need to keep selling those calls. If you're just now looking at it, you're wondering if it's starting to slow down. Could be. We don't know yet. It could always go lower. So if you want to sell naked puts on it, sell them down at 8, pick it up for cheap. If you have covered calls on it, keep selling them and possibly buy some long-term puts to protect your position overall.
I got a statement. I want to see if Noah agrees with it or you, Cody, as well. I think people overread slowing momentum. Real trained technicians that are veterans, they see slowing momentum in the pivots on the daily, and they think that means we're going to get a reversal on the top side and the bottom side.
Yes.
Really, it's just an indicator. It's one data point. Right.
Well, for me, it always comes down to context. Like, give me slowing momentum into a major support zone and in a weekly uptrend. And now I think the slowing momentum maybe leads to a bullish reversal, but it has to be in like a bigger weekly uptrend context. A stock like U.S. Steel here, it's been in a downtrend for a long time.
That's why I said it could keep going lower.
It's got slowing momentum, but there's no, bottom fishing is really hard.
Yeah.
And I think trying to predict bottoms just off of slowing momentum alone, it's a fool's errand because there's nothing to say it can't go lower.
This thing's gone down to 615 before, so there's still some room between here and 615.
Well,
there's 40% lower.
It's really subject to trade, war, tariffs. Like, it's been beaten down until you hear a big announcement of infrastructure build in the U.S. using U.S. steel. I don't see this stock having a fundamental reason to recover quickly.
Listen, Father, I must confess, U.S. Steel is one of my favorite cash flow companies. So I've made mistakes in the downtrend too. You get pulled into something that you've traded a lot over the years, but I haven't traded this one in months and months and months for a reason, Noah. When you really pull back and look at the chart and you think about the fundamentals, and I make the joke all the time, U.S. Steel actually should be called European Steel because they are so sensitive to European economics that company's not going to recover just because it's low right now. And there's an old lie about value investing that low PE ratios are enough to get you interested in a company. Sometimes a PE ratio drops because the company's a garbage fundamental company at the time and the price is falling as a reflection of the economics. I'm interested at some point. I'm not touching it until that trend changes, though. I mean, that's my personal opinion.
Well, yeah. It's like standing in front of a train hoping it stops. Like, that's kind of the idea. It's got down, even though it's slowing down. It has not put in a bottom. It hasn't reversed. And I don't think there is an economic driver behind it. And I think that would come with a pickup in production, consumption, and fears of recession going away, plus the tariffs on that. I mean, metals and steel and aluminum have been hit really, really hard with tariffs.
Yeah. Noah, you're going to get the next one. Sherwin Williams, SHW.
Pretty overextended on the weekly chart, high base on the daily chart. This is where multiple time frame analysis really kicks in. This is definitely top of the range on the weekly. So you look at the weekly, good momentum. Doesn't mean you can't go higher. Daily chart looks like a nice high base breakout. Because of the weekly chart context, I'd be cautious on that. Limited risk profiles only.
Yep. Microsoft is next, MSFT. And Noah, I'm going to kick this one to you as well. And then Cody, I'm going to give you 2 in a row back to back. Noah, you take Microsoft.
I like the consolidation pattern. As far as tech stocks go, it's one of my favorites. Good breakout here, resistance at 141.68. And again, back it out to that weekly time frame. This has got a little bit of a consolidation pullback, and I've got a lot of data in there, but let me zoom in. That's a pretty solid bullish.
Back that out for back that out for a second. The beauty of that long-term uptrend, it cannot be understated. Microsoft has quietly become the best company in tech, and they're not getting attacked by all the regulators and all that kind of stuff because the way they run their business is different. Yeah. And quite frankly, that's just a beautiful, beautiful, beautiful chart and company from a long-term perspective.
That it is, and it's got a consolidation pattern, and it breaks. You get a stock like this, buying a break to a new high can seem a little scary, but it's a pretty technically sound move. If you look back at previous breakouts, it does tend to give them a good run after a breakout. I like it. I like it a lot.
Two quick ones: Citigroup and EA. Cody, you get these two. Citi first.
All right, Citigroup, I'm looking at a low base below the 200-day moving average, but there's also a lot of support right there, about $62. So really, it's kind of a range between $62 and $60 itself. If we get a break of $60, I am very happy to short this. We also have earnings coming up next month. Nothing really to worry about just yet, but when Citigroup reports, it's typically around the start of earnings season. Not much here. It's neutral chart.
Electronic Arts, EA. We were talking gaming stocks earlier. EA here, Cody.
So EA got a little pop because of Activision news, but if you notice, it's popping right into a lot of resistance and choppiness off to the left. This thing is still neutral and it's going to remain neutral until it were to really show some directional movement.
Yeah. And last two, I'll take them both. DHI, DR Horton. Man, I got to tell you got to love the uptrend high base. It's already up a few days in a row. Breakout of 50.64 with your confirmation using step system rules. Looks like another high base breakout for a quick swing trade. PayPal, PYPL. And a little compression pattern, failure on the earnings there about a month ago. Now it's into a neutral condition. Volatility down here, Noah. I don't see volatility on that chart. I would be interested in a vol build strategy at some point. If you can get some cheap volatility into the next earnings there in mid to late October, I would probably wait a couple of weeks on that. I think it's a little early for that. I love PayPal as a company. I'm interested in credit card companies coming back. That would have to clear the pivots and the moving average for it to be a pure directional play. Might be a better kind of neutral or cash flow play as you're waiting for the chart to develop. And guys, that's it here tonight. We got our Tackle 25 system. Noah, obviously we're going to enjoy that and make sure that you have a great show out there. Cody, anything we got to promote over at Tackle Trading?
Yes, we need to promote the fact that you need to get over on to Instagram, check out the take on Apple, as well as vote on which stock they want Mark Justice to break down for him this week. That's all I have, but I also want to add one last thing with EA. I had to look it up because last time I remember trading this, it was down in the 20s or so. I had to look it up. They had a stock split. It's the reason they're even $97 company right now is they had
a reverse split.
Yeah, they had to do a reverse split to even bring their company back to a decent dollar value. So EA is still a non-touch for me. It's a very volatile company. Any company that has to reverse split to keep its stock price up makes me nervous.
Yeah. Listen, the gaming sector is so volatile up and down. Look at Activision. Same thing with Take-Two last year. It's so sensitive to how these games sell. It's like a movie release, Noah. And gaming is as big as media. We were talking about films before. A label like World of Warcraft. That's like Star Wars, It's such a big name. EA, the Madden release, I think that's what they have right now. So maybe that is popping it, Cody. Football's back.
I think it's Activision news. They have a new Madden every single year. If every year they get a pop off of releasing one video game, yeah, they need to diversify a little bit.
Yeah. And last thing here, guys, if you're not a pro member yet, sign up for a trial. We give you 15 days for free. On a daily basis, we do a 1-hour live trading lounge with one of our coaches in our pro community. We have all of our shows in the evening. We rotate them between Monday, Tuesday, Wednesday, and Thursday. Mastermind groups, coaches shows, you name it. But there's a bunch of courses like the Step System course, which is a 9-hour course. You can go and learn how to read technical analysis, build your entry points, your rules, all that kind of stuff. There's really no reason that if you want to be a trader, why you're not a pro member at Tackle Trading. So do that. Make sure you give us a thumbs up before you bounce out here today and get the word out there. We'll be back tomorrow. Hopefully Google can figure out the circle of death here. It never did work for me, Cody, but obviously it did work for a lot of our audience. Is it working on your side, by the way?
Yeah, I got it to work.
Yeah, c'est la vie. I'm going to have to figure it out. Google. I'm not going to short you yet. We're going to wait, but we'll see. All right, guys, we'll be back tomorrow. Have a good day. See ya.